Hi, and thanks for joining us. On today's show, we've got Bruce Campbell. He's the founder and portfolio manager at Stonecastle Investment Management, Inc., and also a principal at the Decisive Dividend Corporation. Bruce knows things financial. Oh, goodness, we'll go with the one previous, I guess, is the way that you do it. So thanks for this, and we'll see you next time. Thanks. Bye. Hi, Bruce. Thanks for joining us here today from, can I say sunny Kelowna? What are things like in Kelowna these days?
It's sunny today. Yeah, we actually have spring, which is nice. I mean, I guess it's was it the second or third day of spring here now? So
it's been an amazing, well, I guess even the last 6 months. You and I were chatting earlier, and you were dealing with fires at one point, weren't you? Like the smoke from the fires. It's been pretty incredible, the weather we've had.
yeah, it has. I mean, we've had a fantastic winter from anyone but a skier's perspective. But that kind of worries us a little bit on what that might bring for fires this year. Hopefully, hopefully we get a wet spring, which is funny to ask for, but it's what we'd like.
Yeah, it's just the way we're all talking now, right? Yeah, because we're probably going to see something in the summer as well. In any event, that's beyond our control. What we can control is the way our businesses are functioning. You and I have worked together, and I don't know if we've any common clients, but certainly discussions of business owners and as they grow their wealth, what they like to do with it. And perhaps maybe let's first speak about the ways that they might be able to exit from their existing businesses. You've got a number of interesting businesses on your own front and have built a couple. When we're talking about decisively, what are the first conversations? Well, first, maybe describe Decisive, and then we'll get into the first conversations you have with a business owner in your capacity on behalf of Decisive.
Yeah, Decisive's kind of interesting. A good friend of mine who's the chairman of Decisive, James Patterson, who's actually a lawyer as well. He approached me probably, I guess, close to 14 years now and said, there's going to be this huge exodus of business owners, over the next 25 years, because if you just look at demographics and baby boomers, some of them have succession plans and some of them don't. If we started up a business where we could go out and raise public equity to buy private businesses that are cash flow generating, this would be kind of neat. So we, myself and there's 9 of us in total. We started putting together the board, and then we started putting together the shell company, and then we went out and did our first transaction. And in our case, we bought a fireplace and wood stove manufacturer, which was, kind of an interesting business. It's amazing how that works, and it's been a fantastic transaction. And now what we do is we continue to operate that business, and then we're looking for other businesses that are available. A lot of cases, it's president that is or a founder in most cases that's looking to exit the business. They don't have family that wants to carry on. They're looking for a way out. They really want to look after their staff. That's one thing that we hear an awful lot, is they don't want to sell to a big strategic where, perhaps they come in and fire, 50% of the staff to be efficient. So they're worried about their staff. And then what we do is we negotiate on terms. We come in, buy the business. And what we've found historically is that a lot of cases, those businesses have been run pretty lean. So they haven't spent a lot of money on capital. We're able to inject some capital and then really grow the business, which then starts a whole acceleration phase from there. And now we've actually moved kind of to step 2.0, which is we've managed to have a couple of strategic acquisitions where we've added in different pieces in different geographic locations. So that Blaze King was our first transaction, and then we bought last year we bought a company out of the UK that does the same type of business. So the president from Blaze King oversees both of those 2 divisions, and we effectively sell kind of worldwide in that market. And then one of our machining businesses, we just recently did a tuck in as well. They're both in Alberta. So it's kind of an interesting niche, and kind of interesting how it comes together. And then the last piece is that we pay out a dividend. So in a lot of cases, the founders who we buy out, they take 10% of their purchase price in stock, which they get paid a dividend. And some of them are just shocked when they get the dividend checks each quarter, because they're like, wow, how, what's this? And oh, these are dividends. So they have a nice growing dividend and a nice share price as well.
It's a nice structure, and like you say, good thinking earlier, because there is the wealth transfer, as we've described it, a great deal. I won't say a litany, but a great deal of these boomer business owners who maybe haven't done the planning. We've talked about that many times on this show, but maybe have not done the planning or don't have the options. It's nice to have another option and at least have these conversations, right? You mentioned that you sort of maintain a Rolodex of potential businesses that you could do business with. How are you filling out that Rolodex? How are you finding that those companies that you could potentially be doing business with?
Yeah, I mean, to start with, it was a lot of blocking and tackling. So it was just cold outreach for the most part. We've always had, a few relationships with business brokers. Those haven't been, probably as strong as we would like. And then our internal network. But what we've found is that, two things. One is that as we've continued to build out that Rolodex and continue to contact people, we might reach out to a business owner that says, well, yeah, I might want to sell one day, but that day isn't today. Well, fast forward, we've been doing this for over 10 years. And now some of those business owners have moved or evolved and got to the place, well, now's the time and I want to sell. So there's been some that have moved forward that way. And then the second is as you prove out what you do, there's a lot more interest and a lot more sort of trust in what you do. So some of the accounting firms that we spoke to originally, some of the business owners that we spoke to originally, nobody wants to be first. And so they kind of wait and sit back. And then as you do more deals, they see and can see how it works and talk to other entrepreneurs who have sold out. And they go, oh, yeah, this really works. And so then they start to cold outreach to us, which is kind of interesting. And so right now, we've gone from where when we were trying to find Blaze King, it was really a mad dash to try to find a business that was going to fit our criteria to do our major transaction with our shell company, to now where it's the opposite. We have so many coming at us that it's really a function of, okay, how does it fit with our time frame? How does it fit with our businesses? And how does it fit with evaluation? So we're able to kind of be a little bit more choosy on what we look at.
Yeah, it makes for better purchases for the company itself, right? What's the typical deal range? What size of business are you looking to purchase?
It kind of varies a lot. So, we've done businesses where, they might only have, sort of $3, $4, $5 million worth of revenue, and, maybe it's $1 million worth of EBITDA, up to, we've got some businesses that are, in that sort of 7, 8, 9, $10 million of EBITDA range, and kind of everything in between. And this is one thing, as you kind of evolve, the deals can sometimes get bigger because the access to financing is a little bit easier. We just recently announced that we had upped our line and have a new line of credit with a number of syndicate banks, which is access that we never had really before. Plus, we've done some bought deal financings as well through the capital market. So we have more access to capital. So it allows us to have bigger deal sizes as well.
That's interesting. I wanted to ask how you sourced originally. Was it a reverse takeover when you mentioned the shell? Is that how you originally accessed the public markets?
We went through the Capital Pool Corporation structuring. So we set up that CPC, and then we had to do a major transaction, which was Blaze King, and we had 18 months to do it. And I think we did it in it was probably around 14 or 15. We were starting to get a little bit concerned, but we got it done in time. And it's been the gem of the portfolio. It wasn't like we just did something to do it. We were really picky because we wanted to do it right from the get-go. So, when Blaze King came along, we were thrilled, and it's been phenomenal.
Yeah, that's what I've heard from a number of people through the CPC route, where they feel like their backs are up against the wall trying to get that transaction, the first close. You're rolling now, and as you talk of capital injections, you mentioned the lines. Do you have access to the capital markets as well, or how else are you raising these days?
Yeah, so with Decisive, we like to keep it about 50-50 debt to equity. That we found that that's a pretty manageable formula, and that'll vary sort of size by deal, right? So some deals will just completely do in debt. Others will use some cash because we do have all the businesses are cash flow generating, so we do build up some cash, and so we've done that. And then we also have access to the equity market. The stock trades on the TSX Venture. And we've got, I believe it's 6 investment banks now that follow the company and have research, and they're all keen to continue to show that to their clients because it's got an interesting profile, right? It's a growth company with a share price that's done phenomenal, and then it also pays out a dividend. So it kind of fits the bill of what most investors are looking for, right? Growth and income.
Yeah, really, it's a sweet spot, especially when you talk of growth. I mean, if you, I suppose maybe a little bit up the risk profile given the size, right? It's a smaller, maybe a smaller offering in that regard. Is it on the venture exchange, or where is it listed if people want to look at it?
Yeah, it's the symbol is DE on the TSX Venture Exchange. Yeah, and we're just north of 200 million market cap right now.
There you go. And so, what does the future for that look like? What does 5 years look like for that?
I mean, it's really interesting. We brought in a new CEO. I guess it'll be coming up on 3 years ago now, and he's done a phenomenal job, laid out a strategic plan for the next 15 years. And so, it's really kind of rinse and repeat is the formula. We look for the businesses, find attractive businesses, buy them, inject capital, and then, continue to operate them. And with any business, I mean, there's always going to be some volatility with that individual business, but having the portfolio of a number of different businesses in different segments really takes that volatility out. So that allows us to have that dividend where we pay a monthly dividend, and we've increased it over time. And that will be the plan, is that as we continue to grow both the top and bottom line and the cash flow, we'll continue to pay that dividend out over time, and the share price should appreciate.
Yeah, it should follow accordingly, right? It sounds like the best of both worlds there. It sounds great, Bruce, and it obviously gives you a nice, I don't know if it's a feeder is the right word, but let's talk about your day job as well, right? So, I mean, obviously this is something that occupies part of your time, but the reality is you're identifying companies on a regular basis to invest in, aren't you? Can you talk a little more about Stonecastle and what you're doing with the majority of your time?
Yeah, so I mean, my real day job is managing portfolios, and we have a number of different funds that we manage. So we have Stonecastle Fund, which you're in, and that's our private fund. And then we manage two funds for purpose investments out of Toronto as well, which are available through the advisor broker portfolio management channel. And what we're doing with the Stonecastle Fund, and one of the purpose funds, is we're looking for growth companies, and we found a niche in that kind of small mid cap range. And what we've found is that kind of over the last 20 years, the Canadian market's really changed. So 20 years ago, if you had an advisor at a major bank owned firm, then they could pretty much do anything. But as the world's got more compliance regulated, what the bank doesn't want is they don't want any volatility. They want consistency with revenue, and they don't want stock prices jumping up and down. So those advisors have really been kind of pushed out of that. And what we say now is that most portfolios tend, if you have a portfolio with one of the bank owned firms or one of the majors, it tends to look kind of TSX 60 or really kind of S&P 100, maybe outside of that a little bit, but not too much. And we see, this huge opportunity in these growth companies, the, 100 million or $200 million company that goes to $1 billion or goes to, $5 billion, and it flies under the radar. There's fewer people doing it and looking at it. And the reality of the situation is, because Canadian market is smaller, we actually get more results that we don't see, say, from even in the US, because in the US there's just so many more investors looking at stuff that all the rocks get turned over. And in Canada, we tend to see that that's not the case. And there's also a lot of hard cap limits on what investors, both from the investment firms, but also from the different fund companies, the pension funds, can invest in. And so it's a real interesting niche that we've found here, and it creates complete and total diversification for most portfolios, because most investors have that big cap, large cap exposure, and they don't really have that growth. And so we provide that. And then with our other fund that we manage for purpose, it's an income fund. And again, it looks very different, because we have a lot of companies in the portfolio that have a completely different profile than sort of your standard utilities, pipelines type of feel that a lot of income investors have.
Yeah, and a lot of Canadian investors, right? Yeah, you're right. You fill a niche that is maybe more untapped for the typical Canadian investor. A lot of people do so through their bank, right? A bank advisor, as you say, is going to have them in a lot of the top 60 or top 100. Whereas you're able to dig a bit deeper, find some of those companies that maybe someday maybe maybe those that are comprising the index, but much earlier in the stage. How do you define them? Like, how do you find a company like that you think has got that potential?
Yeah, so we have a pretty regimented screening process. So to start with, we look at probably I guess it's around 3,000 companies, and we effectively have ranked those companies based on their earnings growth and their earnings acceleration. And that's really what we're after, is we're after that accelerated earnings profile that they have. And we effectively rank them any given day from 1 to 3,000. So we know where they are, and then we also know what their rate of change is. So over multiple quarters, what we see is that as that business starts to accelerate, well, they probably haven't started at 3,000, but say they're in the 2,000s, and the next thing they're in the 1,000s, and then as they sort of crest into the thousands, it really starts to get our interest peaked, and that can happen over a number of years. So there's examples where we'll meet a company at a conference, and of course put sort of a face to the name, right? I mean, we have 3,000 companies in our database. It's hard to kind of know what everyone does. But what we'll do is we'll meet them at a conference. And there's a good example. We met a company at a conference. They were rolling out a new bus product that was going to be a shorter, smaller bus than what traditionally was used for the transit authorities. And they had just started up the company, just got their proposal from BC Transit, and we watched it. We watched it for it was close to 3 years, and then they got to the point where they were going to be cash flow positive. We invested in it, and went up over 200%. In the first year that we owned it, and there was patience and just kept monitoring. And so we watch those companies that are going to have that accelerated earnings growth, and really they rise up the ranks, and then kind of the opposite is how we get out of them as they start to drop down. Then we're looking for exit strategy as they drop down and come out. And that can be for a number of different reasons. One is maybe they've had disappointing numbers, maybe they've grown too fast or not fast enough. But as well, relatively, we're always comparing. So if that company's here and then all of a sudden they start to drop down because their rate of growth is decelerating, or even that everyone else is accelerating at a faster rate, then at that point in time we'll sell it and move on.
Yeah. Do you have like a formal stop loss, or are you sort of sounds like it's more like a modeling kind of way, and then, or do you have something that's more formal in terms of how you execute?
Yeah, we use a few different approaches. So we do use just based on rank, and we're looking at that rank from a number of different criteria. So not only are we looking at it from the rate of acceleration, but we're also looking at it from a number of different technical perspectives, and that really comes down to supply and demand. The way we look at it, and we combine that to build out a rank. And so if it drops down in that rank to a certain level, then we want to sell it and replace it, because we know that something else is going to be faster and be growing more. And then just purely from a stop loss perspective, we have a volatility stop program that we use. And what it doesn't mean that we necessarily immediately sell it, because the nature of some of our companies is that they tend to be a little bit more volatile.
Yeah.
But what we do is we'll review it when it hits that stop, and then try to determine, well, why is it down? What's happened to it? And should we be selling it? Should we be adding to it? Or do we just watch it?
Yeah, because that's part of the reality. Going back, excuse me, the way we began this is you're investing in smaller companies, so you have to expect, I suppose, some of this greater data, right? Greater ups and downs along the way.
Yeah, for sure. And I mean, that's that's the profile of what we do. And part of, what we always say is, if somebody came to us tomorrow and said, I've just sold my business for $10 million. Here you go. I would say, well, it doesn't belong all in Stonecastle Fund, because there is a fair bit of volatility that can happen. You're going to get higher returns over longer periods of time, but there's a fair bit of volatility. So you want to have a multi-managed approach where you have, more than one investment style, so that, they perform at different times and do different things. And we're one piece of that.
Yeah, I think that's a good way to look at it, right? There's a niche. There's a niche. Everybody should be looking at different to have a well-rounded investment profile for them. Certainly, you fill that need very well. what do things look like for that in the next 5 years as well? Sort of the same question. I guess it's market dependent, right? And this is just part of the markets, if we'll say market cycles.
Yeah, it is market dependent. We're actually super excited about what we see because, if you kind of go back and look at, everything that's happened over the last kind of 5 years, we saw rates coming up and then they went down in 2018. We were starting to see things recover, and then we got hit with COVID, which, everyone talks about the black swan with investing, but I really do think that was a black swan event because nobody really could handicap it was going to happen. I can't imagine unless you had like a really clear crystal ball, or or you were guessing, and you probably wouldn't have guessed what would have happened out of it. And so we had that black swan event. Things started to improve. We saw, this huge bump up in inflation, and then in order for this, to get control of that, the central bank started to raise interest rates. And even before that happened, the market started to anticipate that that was going to happen, and we really saw, stocks start to come down. And if you look at the data, we really have been, even though it's never been kind of announced as like, oh, we're in a recession, we've seen a global manufacturing recession worldwide, and it's slowed down, and it's maybe rolled from, pocket to pocket, from sector to sector. And now we're actually starting to see that improve. And we saw, the US, really kind of led by technology, bring us out of this. And it started, I guess, close to a year ago now. We've seen that move up in the US technology. And if you remember last year, the talk was the Magnificent Seven, and everyone was talking about these Magnificent Seven. And that was because that was where the earnings were, because, rates had come up so much and it was putting pressure on a lot of companies from an earnings standpoint. Well, now we're just at the cusp of where that's starting to change, and we're starting to see earnings revisions from companies in multiple sectors starting to be moved up. And we haven't seen that really over 24 months now. And that's going to start to trickle down into other areas. And the talk last year was that, if we lost any of the leaders of the Magnificent Seven, the market was going to drop. And, we've seen Apple fall off, we've seen Tesla fall off, and yet the market's hitting all-time highs for the S&P.
Although, how much is it just Nvidia though carrying us, right? Because you're right. I mean,
Well,
there's been that big risk to that in terms of the breadth.
it's been some of it, but now we're starting to see, that diversify, right? So financials are starting to move, industrials are starting to move now. And you're now the latest has been, some of the commodity sectors as growth starts to reaccelerate. So all of that put together, we think that this is kind of starting the next earnings cycle, which is where things get really interesting, because when we get companies that are increasing their earnings, and at the same time, especially in that kind of small mid cap area, the valuations have been cut, in a lot of cases in half. We have companies that, have grown their revenue by 50%, growing their earnings by, 25% over the last 2 years, maybe even per year. And the valuation of the stock's down 50%. And now all of a sudden they're going to a sector, or they're going to a time of the cycle where they're going to see acceleration in those earnings. Well, now you get growth from the earnings in the stock price, but you also get multiple expansion. So you can get like twice the opportunity there
Yeah,
that you would
hopefully
have
we
had
realize
in the
some of that. As you
past.
say, there's a lot more torque, right? If that's realized, we've been waiting, obviously, uh, and again, a lot of it has gone to what we say the Magnificent Seven. We're looking for some areas as well that might also benefit. You've been into other areas. How much, do you follow the narratives? How influenced are you by the narratives? Is it the type of thing that can give some extra torque as well to some of some of the companies you're looking at?
Like when you look at trends and things like that, is
Yeah,
that?
and not so much, well, trends are to define, I guess, my word of narratives. Like, let's say we're talking AI now, right? People, that's the hot topic.
Yeah. Well, I mean, certainly it has an impact, right? And I mean, to your point of NVIDIA, if you bought NVIDIA a year ago or you own it right now, it's actually cheaper today from a price earnings multiple than it was a year ago, because of the fact that their earnings have accelerated at such a high rate. So there are companies that are taking advantage of that. And if they are, their share price is probably going to appreciate. There's, of course, always lots of companies that are emerging that, have concepts or have ideas in that sector or space that they want to capitalize on. It's a function of whether or not they capitalize. So, again, when we're looking at our themes, we'll be able to screen out and say, oh, these are all AI companies. And we watch them, and, some of them are real and some of them have that accelerated earnings growth and some don't.
Yeah, they just don't. Now let's steer this in a different direction if we can for a minute. Crypto. I'm sure you're getting people asking on this. I guess, I mean, we'll talk about maybe not decisive and not Stonecastle, so not your morning or afternoon jobs, but in your evening leisure time as you look into crypto. What do you think? What does the
Yeah,
future hold for that?
I mean, it's been quite a rise for sure. And if you go back, a number of years ago, I think I can't remember if it was 2014 or 15. I actually tried to, at that point in time, tried to open a wallet to buy some Bitcoin, and it was incredibly frustrating, and I
Almost
never did. And I
impossible
wish I
back
had
then.
of.
Yeah.
I wish I had sort of persevered a little bit more because it was such a challenge. Because I think at the time it was like less than 1,000, right? And it was just like, oh my gosh, like what? Even if you bought one, like now that would have been kind of interesting. But going forward, you know, it's not a market that I understand completely, but I get the concept, right? You have, a finite number of coins that are going to be issued. When I'm talking specifically Bitcoin, I mean, there's so many other coins out there that I think you have to be careful with. But just Bitcoin specifically, there's, a finite number of coins, and it certainly seems to be gaining mass adoption. And we saw these ETFs get approved in the US. You saw the massive fund flow. So now it's allowing for the first time, really, institutional investors and even retail investors to get access to it in a fairly simple way, right? Before, it's like I said, you had to open a wallet. I mean, there was a whole lot of jumping through hoops with that, and it sort of seemed like, in some cases a bit of a of a complicated world. And now if you can just go on online on your stock account and buy it, they hold it, they look after all the custody, and you still participate in the share price moves up and down. Well, I mean, that seems like kind of the best of the world.
Yeah, really, supply demand, right? We've got a limited supply, and so that's why, especially as the ETFs are looking to fill their bags in crypto terms, we see that
Yeah.
appreciation. Is it something? Okay, flipping back the day job, is it something that you'd consider it for, or would it fit within the investment profile at all for making purchases with any of the funds?
Yeah, I mean, it's a little bit more challenging looking at it just purely from almost a commodity standpoint, because, we like to look at that earnings and that earnings acceleration, earnings momentum, and it's hard to kind of track the commodity from that perspective. And historically, like, if you were to look at oil, well, we don't invest directly in oil, but what we'll do is we'll invest into oil companies. You have kind of similar situation. I mean, some of these Bitcoin miners fall into that same
Hmm.
category, but they are very volatile, and they don't always track the price of the commodity as closely as you'd like. When I say the commodity, I'm talking Bitcoin, right?
Yeah.
And so it has been a little bit challenging. From a pure technical standpoint, we could probably trade Bitcoin and trade like a Bitcoin ETF, but we haven't really done it at all to date.
It's just interesting, right? It becomes, again, the conversation, right? Even as it informs this conversation, people asking, how do I get exposure to it, right? I
Yeah.
think a lot of people anecdotally, I had a number of clients at the time approaching me with different Bitcoin ideas as far back as then as well. And it's been interesting to watch. Yeah, they watch the evolution of that. Some of them done very well. The majority of them, as you say, the on ramping process itself was so difficult that a lot of them avoided it. I didn't get
Yeah.
involved, and I guess that now some of them, or a majority of them, are regretting just that. But who knows? Again, same question, 5 years, what that looks like. You have to imagine, from the thesis we've just described here, that supply demand. If people continue to ask for it, that it has to be higher. I guess that's what I mean. It's only logical, or it only follows from that, barring some type of hack or something that doesn't seem like is doesn't seem like it's going to occur now. I guess it's now established, or it's almost gone mainstream. So it seems like it's going to be something that we'll continue to see, or will continue to inform conversations. So if people want that type of exposure, as you say, now there's those ETFs, and there'll probably be other vehicles in the future as well.
Yeah, the thing that surprises me is, it doesn't have probably the clearest history in the past, right? As far as regulatory issues and some fraud and, things like that. And yet it continues to be adopted. And I think that shows you really kind of what the demand potential is there, that, early on there was lots of negative news about Bitcoin and blockchain, maybe not blockchain so much, but the coins, and that's really disappeared now. Even though, I mean, the the Bankman-Fried thing was just a year ago,
That's
right?
right.
And I mean, it's kind of gone completely silent,
Yeah, the
when
history
you
is there.
look at the
You're right.
price.
We're not speaking of that. The history is there, but just as importantly, the blockchain is there, right? So it's all you can check it.
Yeah.
You can see it all now. So the way people were using it before, perhaps, for improper purposes, but now if people are buying it and you're tracking where it is, okay, well, this is where it is now, and as I say, that's that asset. There continues to be a demand for it, and I'll call it an asset, right? If there's a demand for it, you say commodity, it continues to appreciate. Um, I guess people aren't questioning that history anymore, right? And nor are they really questioning. I mean, there's really very little to no regulation how it can be used. I mean, I could very easily send you $100 million, via Bitcoin. Certainly, much more easily than I could even wire you $100,000. It's just fascinating
Yeah.
to think how much more, in some senses, practical the technology is than our traditional banking system.
Yeah, I mean, in a lot of countries around the world, it's used that way because it is more kind of efficient and easier to transact.
Yeah, yeah, it certainly is. We'll continue to watch it. It comes up in every conversation I have as well. And it's interesting.
Yeah.
I'm sure more for the ones you have where people want that exposure as well, right? There's another niche or another area for people if they're looking to fill that to go. Where would you turn somebody to if they were actually thinking of that, or I guess saying, well, you and I have discussed. You've pointed me to other advisors as well. Do you have anybody that you know that you would point to in that direction as well, if need be?
Yeah, I mean, there's a few that are starting to emerge now that are specific niche, coin funds, right? So they have an expertise in it. They track them, they know them, they are familiar with them all, and do have a research process to figure out, where they think it's going to go, and then invest and make money.
Yeah, I guess it's this. Well, Purpose may even have one as well, right? Does Purpose have? I thought they had
They have an
some
ETF.
an
Yeah, so
ETF.
they
Yeah, I think they
they they
do.
actually had the first ETF. So even before the American ones were available, they had the Canadian one, and I mean it had super success. They launched it and immediately brought in a couple of $1 billion. And I think a lot of that fund flow is out of the US. And from talking to Purpose, I know they've had some fund flow out of late because you've probably seen some people switch over. And then some of the other fund companies have Bitcoin as well. So I know CI has one in Canada. And I think there's one more that I'm missing.
It's interesting when we speak of narratives where yeah, everyone's been saying how ETFs have just been approved. Yeah, they've just been approved in the U.S. They had existed in Canada previously, obviously. It's interesting that you're even describing flows, right? As those may be sold from a Canadian perspective for somebody that wants access to the U.S. version, right? To what BlackRock's version or any of the versions that are being sold now through U.S. institutions.
Yeah, and imagine what you'll see there is just continue, especially given that it's a commodity, it'll be probably continued, price of the ETF itself will just continue to drop, right?
Yeah, yeah, it's interesting. And Bruce, I want to steer us interest. We're getting into this theme, but this is the type of conversation you don't typically have when you're on BNN, right, or one of the other
Yeah.
major forums that you're able to discuss these things. Um, High frequency trading, or do you look at bots? Do you consider all how those as we talk about how they might be manipulating cryptos, but even the market in general? What's your take on those things?
Yeah, I mean, it certainly has a niche in the market. And it's, kind of it's growing in some areas for sure. It doesn't really factor, well, I shouldn't say it doesn't factor into what we do because it does. We can see it. Probably what has a bigger factor is just kind of the pure algorithmic trading. And this is an area that, people hear the stats that, 70% of trading is all algorithmic these days. And I think they think that it's, maybe that kind of high frequency, like, oh, we're trying to jump in before other order flow or something like that. And certainly there's a piece of that. And there's, big firms that are scalping fractions of a cent on a huge scale to make profit over the day. But the algorithmic trading is more just really handing off day-to-day trading to a computer algorithm that has AI in it, and it tries to get you the best price over the day. and it's continually measuring and mapping and then figuring out where those orders should be going. And we actually use it for a lot of our own trading, and we find that it works really well over a day. Like historically, what we've done is we have different algorithmic programs that we'll run, and we set a limit and then just let the system do its thing. And depending on the need or the criteria, lots of times it gets a better price, than you would expect if you just went in there with a straight limit order.
Yeah, interesting, right? Again, the level of professional, right? For the retail, the person sitting at home, maybe listening right now, the professionals are using tools that the retail will not have at their disposal, and they need to be sensitive to that if they're looking to do it themselves or considering why they're not doing as well as they can be, right?
Yeah, I mean that impact cost of just the trading itself can certainly have an effect on your performance, right? If you do it multiple times, it depends how active you are when you trade, but it can certainly have an impact.
Yeah, it certainly does. Well, Bruce, this is great. Thanks for taking us through, as I say, your day, your morning, your afternoon, your evening. I'd like to end these shows with something that people can take with them through the rest of their day or the rest of their evening. I'm going to turn it slightly on its ear with you because you're so accustomed to giving us, how is it described on the Business News Network? Top picks, I think is what it is. This is not investment advice, but it's stocks or companies that you like and think may have, actually, I don't even know what the time frame is being discussed here. I guess there's not really a time frame being discussed, is there? It's some picks that you like that you think may do well between your appearances on the show. Would that be a good way of summarizing what the top
That's
picks actually
right.
are?
Yeah, that's exactly it. Yeah, and I mean they take a snapshot, so it's like they don't necessarily know what's happened in
You don't know if
between,
people are
but
buying or
yeah.
selling or what's happening. It was so interesting as you watch. It's like, yeah, great. Well, going back to what we just talked in terms of algorithms and maybe the way people are trading. If somebody's trading, yeah, they may have it for 3 months and they appear every year and a half. It's not really the most relevant information. So, with that proviso, what are three that you would suggest somebody listening they might be interested in looking at? And of course, let's say this: if somebody wants, where are we right now? I guess. First quarter, through the rest of the year in any event, given the cycles and the things we're talking about, and some of the topics that you'll probably get into on your webcast that you're going to be discussing in the next few minutes with your investing group at large.
Yeah, I
Give us some
mean,
beta here is what I'm saying. Or give us some alpha here.
yeah, I mean, I guess it depends on kind of your time frame, right? So I'll caveat with that, and
And your risk
also,
tolerance, right? That's why I would
yeah,
say, like,
and
I guess I'm
and
talking to
I
professional,
was
right?
going to
Yeah. So
caveat with
if
your
you're
risk
swinging for the
tolerance.
fences, this is your play money, right? This is your this is for fun. Some of your play money for those types of things you say are interesting. And I might not say this otherwise on a national broadcast, but this is something worth interesting looking at.
Yeah, I mean, a few of the ones that we think are really interesting from a profile perspective. The first one's a company called Avante Helium, and they're in the helium business. They're and how they started is some guys that were in the traditional oil and gas business took a look and said, there's quite a bit of volatility to natural gas. There's less volatility to helium. And, people sort of think of helium as like, what you blow up balloons for parties, or, you put it in your mouth and then you have that funny, high pitched
High
Donald
pitched voice.
Duckish voice, right? But it's actually used in a lot of technology. Something like an MRI machine is used. It's used for cooling of that. And so what Avante did is they went out, they raised some money, they started up, they drilled some wells, and were very successful finding helium. And now they're in the process. They've tied it all in. They've got a pipe in the ground. They're just working on their production facility and their trucking. And hopefully later this year, they'll actually move into production and have fairly significant cash flow. And the stock is really under followed and under known, kind of in the universe out there. So, that's one. Another one that that we like a lot is a company called Avome Medical, and this falls into that sort of demographic aging population area. So it's one that what they do is they produce a lot of equipment for physio rehab clinics, and it's kind of an interesting story. So the chairman of this company, or the former chairman of this company, had done this before. He went out and started to make a bunch of acquisitions. So he did a bunch of acquisitions, and then effectively built up the revenue from kind of zero to $70 million over about an 18-month period. And then, but then realized that it really wasn't being that effective because he had stuck a bunch of pieces together that didn't really work together. So they brought in a different management team, and that management team now has been right sizing the business to make it profitable, and at the same time rolling out new products. So again, it's really under the radar. They sell into the U.S. and globally, really, and they have kind of like the gold standard. So as Kleenex is to tissue, their Biodex product is to rehab. So that's another one that I think is kind of interesting. And then, just kind of
Right, is that
going,
an venture? I should have asked on the
yeah,
previous as
that's on the
well.
TSX. Both of
Yeah.
those are on the TSX venture. Yeah.
Uh,
And
what's
then
the
the
symbol there
last,
on, can you just say the symbol? I didn't think of asking that before as well.
so Avante is AVN and Avom is EVMT.
Okay, there you go. All right, and the third of the three that comes to mind.
Yeah, off the top of my head here, you're gonna put me on the spot,
Yeah,
but
exactly. Again, we're not going to track this. We may enter the chat, but we're not going to measure back against what we did
it's
here.
not like BNN. Okay, that's
That's right.
good. So then the other one that's kind of interesting is a company called Propel. And what they do is they do you're really financing to people who don't have the best credit rating, but they're using AI in their process. And so what they've done is, and this is kind of the second time the CEO has built out a company, he built up another one, sold it out, and he started this one a few years back. And effectively, what they're doing is you can apply online. They go through, kind of the screening process using AI and using a bunch of tools, and then it drops to someone else who actually approves it. And there's a huge spread in the margin there between, what they're borrowing the money at with their lenders and what they're lending it out to their clients. And the growth has been phenomenal. This is a really underserved market. And if you look at the numbers, they just reported their earnings here probably in the last 3 weeks, and the company's doing phenomenally well. It pays a dividend as well,
Hmm.
which is kind of interesting. And it's one that, I think if you kind of tuck it away, it could be like a go easy, that type of
That's what it sounded like.
profile
A go
over.
easy as you described that, right? And yeah,
Yeah, it's very similar just in the US. Over the next sort of 5 years, it could have, kind of similar type of profile as Go Easy has. And I mean, Go Easy's gone from, 10 years ago, it was probably, I guess 12 years ago, it was a $10 stock, and, it was a $200 stock at its peak, and it's trading around 165 now. So it's been a pretty good return over the last, 10, 15, 10, 12 years. And I think Propel could be similar if it
interesting.
lasts. I don't even think it'll last. It'll probably get taken out.
Somebody takes that as well. And what's the symbol on that one, Bruce?
That's PRL.
PRO.
Yeah.
There you go. So some alpha for the listeners there as well, bringing some of Bruce's day expertise to the show. Bruce, any last thought for somebody listening that has a little bit of play money, right? As they say, different than you. Somebody might be talking to for their wealth plan and looking at an overall, but a little bit of play money, a little bit of we talk Bitcoin, we talk about some of these alternative things. Is there other spots that are going to be future narratives that just people keep their eye on? I mentioned AI because it seems to be so top of mind for everybody these days. But where else? What other things do you think we're going to be scratching the surface in the future?
I mean, that's a pretty big one, right? That whole revolution of what technology will bring and how more efficient we are, both from AI perspective, but also what we'll be allowed to do, or how we'll become more efficient using a blockchain itself. So there's going to be, some kind of interesting things that transpire there. And then if you look at from a demographic standpoint, I mean, the millennial generation that's coming up knows technology really well, and they're a bigger generation than the baby boomers, and they're just starting to emerge into kind of their prime years. And so there'll be probably some really interesting things on, the technology side of things there as well.
And the way that they invest, right? Just through and through, right? It's fascinating to watch. We'll be along for the ride, right? It's been a pleasure having you here with us today, Bruce. If somebody is
Yeah.
interested in knowing more, getting involved, or talking to you on the Decisive front or the Stonecastle front, what's the best way to reach you?
Well, the best place to find me is stonecastlefunds.ca. And then if somebody wants to reach out to me, my contact information is there, but you can also send me an email to Bruce at stonecastlefunds.ca.
Fantastic. We'll have all that in the show notes as well. Bruce, thanks so much for joining us here today. I look forward to revisiting the picks, not in the next cycle, but perhaps in a couple of years' time, and we'll probably have some more alpha for everybody at that time as well. Thanks again, Bruce. We'll talk to you soon.
Yeah, thank you.